surprises because the market needs a steady management. So it's not expected that every time there is a meeting, there is a change in production, there is a change in decisions for the supply. But also, if you look at the market is still tight. We have on both supply and demand. Looking at it, we have the OPEC extending that almost 2 million barrels of oil being out of the market. Inventories are low. On the other side, we have geopolitical factor. We have also the robust economy that maintain the demand is strong. Also, again, the geopolitical factor had its own impacts on supply and demand. We have now a longer shipping route, which has increased the demand, and also some of the threats against energy facilities, like attacks on Russian energy facilities, has reduced the refinery capacity.
Indeed, and oil prices tracking at 5-month highs now. Sara, what would you say is the primary driver of oil's push to 90 USD right now?
Well, again, as I mentioned, market is kind of tight and is going to be in deficit because of the low inventories, the extension of these cuts, and also geopolitical factors and a strong demand. However, something that is important is to consider that for market and investors is very important to have these proactive decisions for two reasons. One, for investors, because obviously it's not always the short-term immediate impact of the OPEC on the prices, but we need to maintain, we need to be sure that this investment in the oil industry is maintained. OPEC Secretary General has called for investment in oil industry to meet the demand. We have not just the demand because of economic growth, but unforeseen factors like geopolitical factors or reasons like AI, or even the demand derived from energy transition, that we need to have enough investment. On the other side, looking at all these geopolitical factors and tensions in the market, OPEC maintaining this ample spare capacity kind of ease the market. So prices being high is not just because OPEC is keeping that output out of the market, but it's because of the geopolitical tensions factor priced in, has been priced in. And also, again, as I mentioned, having that spare capacity is kind of easing the market, despite the fact that we are heading to the summer season, that demand is going to be higher.
And of course, a lot of people often question the OPEC strategy, but you say what we have here is spare capacity for OPEC to be able to mitigate and manage potential future market risks. Now, one of those could be an escalation in tensions on the Israel-Hamas war front, particularly if we saw that conflict spreading to include a direct confrontation with Iran. How are you reading the Middle East security situation right now and the geopolitical price premium that this is putting on crude prices?
Of course, referring back to all your previous interview before me, the tensions obviously are high. There's a lot of risk factor in the market. Therefore, it's important to have that is in terms of spare capacity. And OPEC has, since COVID, regularly mentioning and also meeting more regular and more often than before to make sure that they have that tool of constant gathering and meeting to make sure that they are maintaining their market balance if there is anything happen. But again, I think this decision is important for maintaining the spare capacity, but also it's important for investment, which we need that investment for medium, long-term supplies to meet the demand. And also, one other factor to looking at it is that looking at the inflation, the purchasing power of 1 barrel of oil is different for OPEC producers as well. So these factors all are very important. And again, going back to geopolitical factor, a lot of uncertainties in the market. So it's very important to have that ease for the market.